The SEC, the Securities and Exchange Commission, has just approved a Bitcoin ETF. So first, what does this mean for investors? Should you invest in it, and what are the pros and cons? Let's go ahead and break it down. So the SEC just approved the first Bitcoin ETF ever, and it's going to become live here pretty soon, and it's not going to be the only one. So I took a lot of notes on what is going on here and started to answer some of the major questions that I think you are going to have and some of the things that you should be paying attention to. So first, remember, this is an exchange traded fund, an ETF, but more specifically, it is a spot ETF. What does that mean? This means that this investment is going to track, aka follow, how Bitcoin does and basically mirror that performance in your portfolio. You will not own Bitcoin directly. Okay, you will not own Bitcoin directly. For example, there are gold and silver ETFs right now where I don't want to go out and buy my own silver bar and sell that. That's weird, right? It's just not really easy for most people to do. So I can, if I want to invest in gold, I want to invest in silver, I'll invest in a gold and silver ETF. If gold does well, the ETF does well, so on and so forth. And that's the exact same concept here behind Bitcoin. So you don't have to own it on your own. You don't have to do any of that, but you should be able to buy it. And if Bitcoin goes up, this ETF should go up. So that is the advantage here. Now, the pros here, other than that, is the fact that this is going to, one, bring in institutional money. When I say institutional money, I mean a lot of these major banks and firms like BlackRock that manages trillions. Yes, trillions with the T. They invest trillions of dollars in a bunch of different asset categories. I can say the same about Fidelity, the same about Vanguard. Well, once they start pouring money into Bitcoin, I would assume that this is going to push the price up significantly over time. Not overnight, but definitely over time is a very reasonable assumption here once they start to offer these. And there are up to 11 at this point in time that are going to be offered, and we expect these to come online at some point in 2024. So that is great. These are more regulated. The SEC has approved it. Now, it's important to note that just because the SEC approves something doesn't mean that it is good. Okay, there are a lot of investments out there that are approved and legal, but don't really work or could actually lose you money. So don't get this confused that because the SEC approved it that you can't lose money. You absolutely can. So do be careful there. But pushing institutional money is something that's good. The fact that it's more regulated is good because you don't want to run into an FTX situation where the entire company and the entire environment just vanishes, right? That's not going to happen in a case like this. There are protections and measures out there that you have to file with the SEC. So in most cases, if something crazy were to happen, you're going to be able to see it from a mile away, unlike some of these unregulated crypto banks and things of that nature. So those are some of the advantages. The other thing too is in time, this is likely going to be offered in 401ks at some point, which I don't think is now. I think people have been predicting that for a while, and it could be offered into IRAs. This can, one, give you more access to cash to put into it. So if I am investing 15% of my salary, let's say I make $100,000, I can start investing $15,000 a year into Bitcoin. Now, whether or not that's a good idea, we'll talk about that near the end. However, you may be able to put more cash into it and get tax benefits for doing so. So, for example, right now, if you're investing in Bitcoin and you're selling, you have to pay a tax on that. Well, what if I'm doing it inside my Roth IRA? I don't have to pay any taxes on it as it grows in the future. That would be quite nice. Well, with the Bitcoin ETF, you might be able to do that here pretty soon. So once it's released and we'll see what apps carry it, we'll start to see what the pros, what you can and can't do there. But that is the path here. I don't expect this, or I do expect this to be reality definitely in 2024, but if nothing else, especially in the next 2 to 3 years tops. And again, it could happen within the next few weeks. So those are some of the pros. What are some of the cons? What are the things you may want to be concerned about, or at least know about? Number one is what is called tracking error. So it follows the price of Bitcoin. It doesn't mean it is 100% accurate all the time. This is common. Okay, this is common. If you have any index fund, you have seen this before. So for example, if Bitcoin makes $100 in a day, maybe this fund makes 99. Okay, so it is extremely close. You're not going to get the exact dollar for dollar amount. Again, this is common. But the other thing that you absolutely want to be aware of is most ETFs do charge some fees. And at this point in time, the Bitcoin spot ETFs so far do charge much higher fees compared to index funds. Now, index funds are extremely cheap. We have done videos on this channel to show you how cheap it is. We're talking you investing $50,000 and paying like $5 a year. What? That's basically free. It's not free, but it's basically free. However, for the Bitcoin ETF, it could be a little bit more expensive. That doesn't mean that it's a terrible thing. Perhaps you'll pay $20 a year on, I don't know, a $10,000 investment. Now, I'm just throwing numbers out there, but these will change over time. History has shown us that these fees are going to drop over time, but just know that there usually is some expense ratio, some fee that you're going to have to pay every single year. Now, you're not physically going to pay it, it's just going to come out of the investment. You just kind of sit there and the fee comes out. But that is something that you do want to be aware of. Compared to just owning Bitcoin right now in, let's say, Cash App or some of these other apps, you can just hold it and it sits there for free and you don't have to pay for it. Or I can just hold a stock for free. I don't have to pay for it. But that is something you do want to be aware of. I don't think this is going to be a significant enough fee to say, no, I don't want to invest in it. But if you are going to invest in it, how much of your money should you put into something like this? If this is going to be available in your 401k at some point or your IRA at some point, how much money should you put into it? That number for me, and this is what I've been recommending and saying for a while now, is 5%. 5% right now should be your max. And that the reason is, number one, Bitcoin can still be volatile. It can still be volatile. And we did a whole video about where I think Bitcoin was going to go in 2024. And what was it, like 5 or 6 times, maybe even 7 times that Bitcoin has dropped 30% or more just in the last 10 years. These are significant drops, and we don't know what is going to happen in the future. Once these ETFs are created and they're out there in the market, could it help and they may be less volatile? Maybe, maybe not. Do you want to risk a significant sum of money hoping that it's not going to be as volatile as it has been in its entire existence? I don't know. I'm not willing to bet that much money to find out. So 5% gets you the access. If it goes up, it helps you. If it goes down, it doesn't ruin you. That is the main thing here. So you're getting the benefit without getting the crippling downside of it. I think 5% is usually a good place for people to go. I'll also say this, Bitcoin is still young. Okay, it is still young, and there are things that we're going to continuously learn over the decades. Because right now, I said this all of 2023 and parts of 2022, that we said when it first came out, they said, not me, they said that, hey, it's digital gold, it's going to be a hedge against inflation. When inflation goes up, Bitcoin's going to protect you, it's going to go up. That wasn't the case. We talked about stable coins and all these other, crypto things about what they were supposed to do, but when ish hit the fan, it ain't what they did. Okay, so there's more to learn. I don't know what is going to happen in 2025 or 2035 when it comes to crypto, but what I'm saying is you want to be careful. If you want to benefit from it, I think it makes sense. I told y'all I was working up to 3%, and once I hit that, I'm going to be all right. If I feel real good, I'm going to go up to 5. I'm going to call it a day. Okay, so you still want to be careful. Just because it is approved by the SEC and just because it's available inside your IRA doesn't mean you absolutely have to do it. Even though I can almost guarantee you, you're going to start to see more commercials and more marketing around this type of thing. That's common, okay? There are tons of stocks out there that ain't good for you to invest in, but they are available. So don't get suckered and pressured into doing it. If you A, don't understand it, B, don't want to do it. You don't have to. But if you are, I think taking a normal, measured approach to adding it to your portfolio makes the most sense. We have learned our lesson over the last 3 or 4 years on what it means to be over aggressive and overhype certain things and then get burned at the end of the day. I don't want you to be that, okay? I want us to learn from our mistakes and not repeat those. So approach it in a mannered way, in a measured way to see if it works for you. And again, not everybody has to add it to the portfolio, but you want to get an idea, or at least my analysis on what I think is going to happen with Bitcoin in 2024, then this is the video that you want to check out next.